Hello everyone, welcome back. So student, now we are going to discuss our next chapter, but it is related with the previous chapter only because money and banking are both the terms used together. I had break through these two chapters and make two part of it so that the chapter does not become lengthy. So in the previous class we had learned about money. Now we are going to know that how money is used in banking system. So let's start with the banking first. As the chapter 6 banking, first topic which we are going to discuss is money creation by the commercial bank. So all the banks which are today we are using like PNB, SBI, Kotak, etc. These are all known as commercial bank. Now the main process, as we all know, commercial bank is also a supplier of money. Government is there and RBI is also there because RBI issued the currency. So these three are the supplier of money. Out of the two, banking is more important because it is not only the supplier of money, it is also a creator of money also. Only the banking system create the money. RBI just issue the notes and government also issue the coins, but they does not create the money with the existing money. Only the banking system create the money through the existing money. So let us understand how they make it possible. So first is bank receive cash deposit from public. As we all know, all the public of, if we talking about the India country, so all the public deposit their money in the bank only. It is known as primary deposit. So first, there is a first way of getting the money from public known as the primary deposit by the banks. Second, bank lend money in the form of loan. It is known as secondary deposit. So basically, the money deposit by the public to the bank, that money only the bank lend to other person or the industrialist or the producer to make their production happen. Through this lending process, by giving them loan, bank charges interest on that loan. So it also create money to the bank also, and when the bank lend loan to the public, through that money they create or produce more product through which they earn more money. So basically it is a process of making the currency more or making the earning more. Through this process only money can be created. So it can be only happened by the commercial bank only because they are only the person who are providing the loans. Third will be the borrowers can issue check against loan in this account. The check circulate in the economy. So if the bank provide you loan, the loan comes under your account only. You can issue the check in the favor of any other person whom you want to give the money. This check will be circulate in the economy. For example, A give check to B for rupees 5,000, B give check to C for rupees 5,000, C give check to D, and so on. This check will circulate in the economy and fulfill the need of all the person. Okay. Primary plus secondary deposit equal to demand deposit. So we had learned in the previous of M1 in the measures of money there is a demand deposit. Demand deposit is created through primary and secondary deposit. Primary deposit is the money deposited by the public in the bank, and secondary deposit is the loan provided by the bank. So when we plus both the deposit, primary and secondary, it create demand deposit held by the people with bank. All demand deposits serve as money supply in the economy. Okay, so all these demand deposit, which is primary deposit and secondary deposit, serve as a money supply to the economy in a country. Bank demand deposit is called bank money as this money is created by bank. Okay, so basically when the public is going to deposit their money in the bank, that will known as primary deposit. When bank will provide loan to the public, that will known as secondary deposit. But when it become demand deposit, that deposit is created by the bank only. Okay, because in that the money of public which is deposit and the money lended to other person given by the bank only, it is created demand deposit through bank only. So that's why it is also known as bank money. Because this is circulated in the system not in the form of cash but in the form of check issued by the banks to the holder of the demand deposit. So the demand deposit always be in the form of checks only. It is not in the form of cash. It circulates in the economy and serve as the measures, or it serve as a supply for money to the whole economy and the citizen of India or any country. So the demand deposit does not be in the form of cash. It will always be in the form of checks only. So here is the criteria of creating money by the commercial bank. The main two reasons of creation of this bank, creation of money is, first is primary deposit and second is secondary deposit. If these two conditions are done by the bank, creation of money will be happen, and afterwards when these two conditions are completed, bank create a demand deposit which they circulate in the whole economy as a supply of money. Through this only the creation of money can be created by the commercial bank only. Okay, so if there is any doubt, please ask.